Hello and welcome. Today we'll be talking with Timo Nicholaou, President of Consolidated Financial Management and Tax Services, about tax credits. Thank you so much, Timo, for being with us. So can you give us a better perspective about the difference between a tax credit and an itemized deduction?
Yes. It's very important to know that difference because a tax deduction is something that helps you, that you're entitled to by the IRS in different various categories that you're allowed to deduct from your income. So it's a deduction of that income. Whereby a tax credit is a bottom line deduction from the amount of tax you owed. Let me put it in a different perspective and give an example. Let's say someone's in a 35% tax bracket. I know this might be difficult to follow, but the end results you'll be there. And you have deductions of $5,000. Well, 35% of $5,000 is it saved the person $1,750 on their tax return. Okay, so let's use the example you owed $3,000 on your taxes. By having that $5,000 deduction, that allowed you $1,750. Now you only owe $1,250. Now that's from a deduction from your income. Now let's consider the same scenario with a tax credit. Let's say, for instance, and I'll go a little bit more in depth on some of the tax credits you get, but let's say you got a tax credit of $5,000. In my example, the person that owed $3,000 in taxes, it would eliminate that $3,000 and he'd get a $2,000 credit back, or refund.
Can you tell us more in detail about some of the credits that are available?
Sure, there's a great deal of them, but there are a handful that the public really should be aware of. And one of the most important one I personally feel is the earned income credit. It's very scrutinized. A great deal of things nowadays are scrutinized by the IRS. I don't mean to say that a great deal, but earned income credit is one of them because it is a very big credit that people can get. It is predicated on how much money a person makes relative to the number of kids that they have. And without getting a real in-depth, to give an example, if someone had $46,000 or less of income and they had 3 children, they could get up to a $6,000 credit. So it is a mathematical formula predicated on your income and number of children. Another credit is child and dependent care credit. The child tax and dependent care credit is for expenses for qualifying children under the age of 13, or if you have a disabled spouse or relative that you're able to claim. In this instance, it's 35% of the cost of the care up to $3,000 for one qualifying and $6,000 if you have 2 qualifying people. That's a lot of money of a direct care. And it is also predicated on income levels of how much of that credit you can get. Then there's the child tax credit. Child tax credit ends up to be, if you have children 17 or under, you might be eligible for direct credits up to $1,000 per child. Again, everything's predicated on what are your adjustable gross income, the number of children. There's a retirement, it's interesting one, this one is very interesting, is retirement savings contribution. It really allows people that have been doing the right thing by saving in their retirement plans, and if they're lower income people and they've been saving, there's a credit that they're able to get for that. One very important thing that's been very popular out there is American Opportunity Credit. This really ties into people that have children in college. And it allows them to have credits up to $2,500 per eligible student. Now, there's another little item I want to intervene in here. We're talking about tax credits, and we did a distinguishing factor about what is a credit and what is a deduction. Many people also have student loans. That interest may also be deductible, dependent again on income levels, that they might be able to also deduct the interest off the student loans and a credit for their college tuition and costs of college. There are various energy tax credits, and this changes almost every day as far as what is eligible and not eligible. But the best way to summarize it is if you have purchased certain energy efficient products, you're able to get a direct credit from the government on your taxes for this. And some of those include changing of your windows. There's a thing called Energy Star. If you ever seen it, I think it's a little Consumer Power Energy Star, or it might be Detroit Edison, or it might be even for both of them. I'll give both of them a plug. And it's just a little Energy Star. And if it has that, you're eligible for various credits for buying those products. So it's very important to keep your receipts on each of these items in order for your tax preparer to deduct those.
This sounds like a lot of information for someone to know. How would someone know that they're actually entitled to these tax credits?
Well, it's very difficult. Many people that have been taking them because they learned about them or their preparer had them, they know that they're entitled to, and they look at it on their tax return diligently. This is one of the reasons that we're having this discussion. I thank On TV for allowing me to be able to talk to the public, to make them aware. That's the idea of what we're doing here, is to make people aware of what they might be entitled to. Other than that, they might not know if they do their own tax return. If a friend does it that doesn't know about them, or a family member that does a lot of returns that doesn't know about these, they're not going to get them. They're special forms. Even if a preparer does a return, and they don't have the proper software to detect certain things, if they don't know they're entitled to them, they won't get it. So the best thing I could say is for them to just consult with a professional. You can call many places for free advice. They're more than happy to just get some of the vitals to talk to you. And in many instances, it's probably worth going to the professional because of taking these credits that you might be entitled to. That makes it more than worthwhile. They have, again, the sophisticated software to be able to detect these things. And it's not unheard of for us at least 3 or 4 times a year to get a client in that we amend the previous 3 years because they haven't been taking these and get a decent sum back from the IRS.
That's all the time we have for today, but stay tuned for more tax tips on ONTV. Thank you so much, Timo, for being with us today.
Thank you. Thank you for the opportunity.
Timo Nicholaou is president of Consolidated Financial Management and Tax Service. He has been in business for 30 years, operating his practice in downtown Rochester. He is currently in the process of making his home in Lake Orion and will be opening a tax practice in downtown Lake Orion at 214 South Broadway this January 2014. For more tax tips, you can contact Consolidated Financial Management and Tax Services at 248-650-6900.